All right, welcome to your Talk Tickers briefing. Today we're breaking down what was, frankly, a monster second quarter earnings report from Ollie's bargain outlet. The results were fantastic pretty much across the board, so let's just jump right in.
The CEO, Eric Vanderbog, really said it all with this quote right here. It pretty much sums up everything we're about to talk about. It feels like they're not just executing well, they are riding some serious tailwinds in the market.
So what's the big headline? It's simple, really. This was a classic, clean beat and raise quarter. Ollie's blew past what analysts expected and then told Wall Street they're going to do even better for the rest of the year. You'll love to see it. Okay, let's get into the nitty-gritty. Adjusted earnings per share, 99 cents. That's a solid 8 cents better than Wall Street was looking for. And revenue came in just shy of $680 million. That's a whole $17 million more than expected. Just a really powerful performance on both the top and bottom lines.
And this is a big one. Check this out. To see how healthy the business really is, you look at comparable store sales. They were up a really strong 5%. That means more people are walking in the doors and spending money.
And it wasn't just sales. Profitability was a huge story here. Gross margin expanded by 200 basis points. Management is basically saying it's all about getting better deals on merchandise and doing a better job of controlling inventory loss, what they call shrink.
So what's the secret sauce here? Well, a huge part of it is their loyalty program, Ollie's Army. It just blasted past 16.1 million members. That's up more than 10% from just last year. This thing is an absolute machine for them.
All right, so we see the what, an awesome quarter. But now let's talk about the why. What are the key things that management pointed to on their earnings call that made all this happen?
First off, the big picture. The macro environment is just playing right into their hands. You've got other retailers struggling, closing stores, even going bankrupt. That means there's way less competition for all that discounted merchandise. Think about it. Ollie's is like the big fish in a shrinking pond now, so they get the best deals, which flows right to their bottom line.
Second, you have to look at their real estate strategy. It's incredibly smart. They're swooping in and grabbing great store locations from retailers that have gone out of business, like Big Lots. Now, this means for a little while they have to pay what's called dark rent on an empty building, but the prize is locking in super low rent for years and years to come. It's a fantastic long-term play.
And the third big driver here is something called the trade-down effect. With the economy being what it is, even folks with a bit more money in their pockets are looking for a deal. And where are they going? They're finding Ollie's. This is huge because it's bringing in a whole new type of customer for them.
Okay, let's zero in on what might be the most important part of the whole story. Management calls it their growth flywheel, and at the center of it all is that Ollie's Army loyalty program. This is the engine that makes the whole thing go.
And believe me, this isn't just talk. The impact is totally real. They completely revamped their big Ollie's Days event this year, making it exclusive for members. The result? It added a full percentage point, that's 100 basis points, to their comparable sales growth. That's incredible. I mean, you don't have to take my word for it. Management was practically gushing about it on the call. They called it a huge success that went beyond everything they hoped for. It drove massive customer engagement and, get this, a nearly 60% jump in new people signing up for Ollie's Army during that 1 week alone. So you can see how this all connects, right? This is that flywheel spinning. They open more stores, the great deals and fun events pull in new shoppers. Then they get those shoppers to join the loyalty program. And boom, those loyal members come back more often and spend more money. It just feeds on itself.
Look, a great quarter is, well, great, but Wall Street always wants to know what's next. And this is where Ollie's really showed its confidence, by raising their forecast for the entire year.
I mean, just look at this comparison. On same-store sales, they basically doubled the low end of their guidance. They bumped up their earnings forecast, and they're planning to open 85 new stores this year instead of 75. This is not some tiny little nudge upwards. This is a massive vote of confidence in their own business.
And just to give you a little context on that store growth, their long-term goal, their algorithm, is to grow their store count by about 10% a year. Well, this year, they're on pace for closer to 14%. They see the opportunity in the market, and they are stepping on the gas.
Okay, so you've got this amazing story, you've got guidance going up. What does it all mean for the stock? That's what we're tackling in our last segment, The Next Call, where we lay out a potential idea for what to do next. So the big question on everyone's mind is, okay, the stock popped after earnings. Did we miss the boat? We think the answer is no, and the setup going into next year still looks really compelling.
So here's why we think there could be another surprise to the upside. First, this management team has a track record of being conservative with their guidance. They like to underpromise and overdeliver. Second, those great deals they're getting aren't going away anytime soon. Third, they had some one-time headwinds this year from high medical costs that should get better in 2026. And finally, their balance sheet is a fortress, almost no debt, which gives the stock a really solid foundation.
So, what's the play? We're looking at an option strategy here. The basic idea is to make a bullish bet that the good news will continue into the next earnings report, but in a way that helps manage your risk and reduce your upfront cost. It's a way to play for that continued momentum.
So, when you put it all together, the powerful execution, the killer market position, and that really clear path to more growth, for us, the rating on OLLI is a solid outperform. This company is just firing on all cylinders.
And as always, please remember, this is not financial advice.